What's up, guys? Welcome back. I know it's been a minute. I've been doing just the live streams lately and not really making the actual videos, but we are back nonetheless. I will try to stay on task and keep on schedule now that things are a little bit back to normal. And one of the DMs that I've been getting a lot lately is choosing the strike price to trade. So, how do I choose the strike price to trade? So, we're going to go ahead and talk about that. What's up, guys? Welcome back. We're going to go ahead and jump right in. And just to remind you, if you are a new subscriber, I appreciate you guys. Just recently, we reached over 1,000 subscribers, guys, and it means so much to me. I remember starting with like 2 subscribers and looking at this huge uphill and didn't know how I was going to make it up. And I just appreciate you guys. If you guys are brand new to the channel, make sure you hit the like, subscribe, leave me a comment, and let me know what you thought about the video as well. But let's talk about how to pick a strike price. All right. So this is a question I get quite a bit from my members in DMs and also on Twitter and DMs and things like that. So we're gonna jump right in, and what I'm gonna tell you is meant for scalping options. So I know there's a lot of strategies out there, calendar spreads, vertical spreads, leaps, things like that you could play with the options that are a little bit further out. But for this example, just nitty gritty, straight to it, I watched some other videos on this topic and they just made this huge explanation and just there was no need for it. So I just want to jump in, give you the information, and we're going to go ahead and move about our day and move forward, right? So this is what we're going to do here. This is Thinkorswim here. And basically what you're going to do is we're going to use the SPY as an example here today. And the SPY moved up in a pretty nice trend today. It kind of grinded. It was kind of low volume, but we're going to use the SPY as example today, right? And so what you do is you come over here to your option chain. This is going to be your option chain, right? And you type in the SPY. Type in the SPY. There it goes. And then, and so now you have all the expirations, right? So basically what I like to do in my room is we typically trade the same week expiration or the next week expiration if it's on a Thursday or Friday. If it's on a Thursday or Friday and the price action is pretty choppy, if there's no real trend direction, you don't want the theta to eat you up. And for you, even though that you're the move of the ticker went in your favor, you could still be down on your position because of the theta on your position. So, and what the theta actually is the time decay. So it's the value. The further away that the strike price is from being in the money, the more that the theta affects you, and that the more that those contracts lose value. So what you're gonna do is you're going to come over here. You're going to look for the weekly expiration, right? So for this week, it's going to be July 31st, right? You're going to come down here, and usually all option chains have like kind of a different color. They change colors at the money. So you're going to see where it changes like that. It makes it really nice and easy to kind of scroll down and be able to see where it's at. And the rule of thumb, like very, very simple, you're going to pick the very next strike price in the favorable direction that you want the ticker to move, right? So in this instance, right, so say like we're going to be using the SPY, and we'll go ahead and go to one chart right here. For me, my setup would have been at the open here on the SPY when this consolidated sideways and we got these compression dots, so you could see how it held support. So at this area, this is 322, right? So the very next strike price is going to be 323, right? So what you're going to do is you'll come over to your option chain. You'll look at the very next strike price in favor of the direction that you want the ticker to move. So since the actual underlying value right at that point that I wanted to get in was around 322.35, the next one is going to be 323 even there, and then you're going to come over and look for that, right? So you come over and look for 323, and then you could highlight calls. So calls is where you're trying to make a bet for this to go up, right? So puts is put down, calls is call up, right? And so this is gonna do a couple things for you, right? So what it's gonna do is whenever you're taking things that are a little bit out the money and then it comes to being in the money, if that if the ticker moves against you, right? If it doesn't move in your favor, say you get stopped out, what that means is that the delta for the option, which is the how much the price actually moves per dollar that the underlying moves, what that means is that you're gonna be able to mitigate your risk a little bit more, because the delta is gonna be less because it's further away from being in the at the money or in the money, right? So you're not gonna lose as much money as it being in the money. Then what you're what else it's gonna do is whenever your stock price, right? So if we come back over here and say your stock price starts moving up, right? So you get this nice candle to the upside, and then you start getting into 323 and it starts moving, above 323. You have what's called gamma ramp. So the gamma ramp, and the I know that these Greeks are getting a little bit, into, really technical and, more in depth. But all you got to know is that the gamma ramp means is that the delta increases very rapidly when it's at the money. So basically the ticker, your premium price will move very quickly once it moves from being out of the money to in the money, and you get this gamma ramp where your ticker, your option premium moves maybe even a little bit faster than the underlying, and you get a better price for it. So you could, whenever you're getting up here towards the resistance, right? So say like your resistance right here, your profit target was this daily resistance that I have manually drawn right here. This, if once you take profit there, then that's going to go ahead and provide more liquidity for you to be able to get out, and for you to get a better premium price, and for you to make more profit than at that point. Very simple. That's it. So just to go ahead and reiterate here, guys, what you're going to do, pick the next strike price in the favorable direction that you want the ticker to move, right? So in this case, we're looking at the SPY. This is going to be, if you're at 322, the next one's going to be 323. You're going to pick 323, right? Then you want to make sure that you're also picking the weekly. So that for this week, because those are going to be the most volatile for the moves that are being made. Now, there are a couple caveats to that, right? So if it's Thursday or Friday and the market is choppy, you want to make sure that you are using the next week's strike price, because the theta, the time decay, that's eating at you, that's eating at your profit, will get to you, and will you could be above your entry price, right, in a favorable direction from your entry price, but your profits could actually still be down then at that point. So you want to get the next week's expiration. So just those two things you want to keep in mind whenever you're getting into the position. But if you're just scalping options or you're taking intraday trades, that's all you want to do. Very next strike price in the favorable direction that you want the ticker to move. And you one last thing. So this is very, very important. You want to make sure that there's enough liquidity in that strike that you pick. So you'll come over to the volume and the open interest. And usually, because there's other people that are making the same bet that you are, right? Usually you'll have enough liquidity in here for you to be able to get in and out. Obviously, right now we're looking at the SPY after hours, and this is what it did for the full day. So obviously you could pretty much get in and out at will at these 323s, right? So if you're looking at, maybe something weird, like I think Netflix does it, where you get like these half in betweens, like the 2250s and 2750s. No, this one doesn't have it. Right here. So you see how this has 232.50, 235, like these in betweens, like on Facebook. So usually these in between ones, like 32.50, they have less liquidity and volume than the whole number one. So you could see where like even like this one, this is 37.50, you could see it's 896, and then the very next one had 3,000. So something you want to be cognizant, you want to use the whole number one. So the whole numbers that have the liquidity and the volume in order for you to be able to get in and out, because if something happens, right, some news comes out, some type of catalyst, and it moves sharply in the direction that you don't want it to, you're going to be stuck in that trade. You're going to be holding the bag, and you're not going to be able to get in or out. So again, just to reiterate, very easy when you're scalping options, when you're doing intraday trade on options. You're going to pick the strike price. You're going to pick the strike price in the favorable direction that you want it to move, right? And you're going to make sure there's enough volatility. You're going to make sure there's enough volume and liquidity in it in order for you to be able to get in and out, and you're going to also make sure that you're using the same week's expiration, right? So quick and easy video, guys. I wanted to go ahead and get this out to you guys. I hope this helps out. Leave me a message in the comments if this is valuable for you, or what other types of videos you want. Make sure you leave a comment, like, subscribe, and if you do want to sign up for our membership, for the New Age Wall Street membership, we do have the link down below. So if you want to become a member, we're killing it, guys. I mean, we've been growing so fast. We have so many new members. We've been killing it. I'm just absolutely excited and awesome, for what's to come. But I'm going to try to make these videos more often and try to get as much as I could out. But you guys take it easy. Stay money, boss. We'll catch you in the next one.